What's up, everybody? Welcome to Zappa Invest. Today I have a brand new portfolio update for you. So let's begin. If you have any questions, comment down below. I gladly answer your question. So let's begin. First, I want to show you what the S&P 500 did in the last month because my last portfolio update was of 1 December. Let's take it from the high point. We can see it dropped almost 10%. It recovered now to just 7%. So the S&P dropped a bit. The Nasdaq dropped even a little bit harder. So I did some changes to my portfolio. In specific, I bought a lot of stuff. Okay, let's start with the Wisdom Cloud Computing ETF. From my last episode, I only had 10 shares, I think. Now I have 15 shares. I'm still gonna grow this position to like maybe 20 to even 25 shares. I will see what the future brings. Why do I believe in this ETF? It's a disruptive ETF with the biggest holdings are Fastly, Zoom Video, Shopify, Twilio, Roku, etc. So I'm down 5% on this position. Doesn't matter. Gonna grow it over the future and let's see what the next stocks brings. My next stock in my portfolio is Virgin Galactic. It is a company that is more speculative than anything because it has legit zero revenue. So it's a small position. You can maybe call it a little gamble, but then again, it has a bright future in front of them. So again, let's go further. Also a new position in my portfolio, gentlemen. It is called Alfen. It's a Dutch, actually from the Netherlands. It's a Dutch company. It's specific in charging points and renewable energy, you can say. I know the stock from I think around 15 euros. I never had the balls to put a position in there because really did not like in the beginning of my career small market caps. So that means companies that have no proven history. But now I've seen them executing for a year and I'm confident in the future. I bought at 52 euros. Again, it's a European stock, so it's in euros. Only 8 shares because again, I feel like I will add to this position over time, just like the ETF. Because how more I execute, how more I will get the conviction of the company. So let's go to the other one. This one is actually digital media solutions. I bought 70 shares. My average pricing is just above $9, so I'm quite down a little bit on this position, over 17%, like you can see. But this company is specialized in advertising. What do? Their business model is pay for performance. What does this mean? They will only ask money if they give you a sale as an advertiser. Imagine. I see bright future, especially in these times. Like, let's say you are a company like Nike and you want to advertise. I mean, in this time of with Corona and shit, I mean, you want to be specific with your money, in my opinion. You want to be efficient and pay for win. So pay for performance is the best thing, in my opinion, you can do. It's a very small company. They do not have proven a lot. Yet, although they are growing at a 50% rate, but we will see what the future brings. I'm again here. I will follow them up, and I think I will have more conviction over time and maybe add more to the position. You can see these companies are small positions. Why? Because I need more conviction to put more money into it. Okay. The next company is NVDA Corp. NVIDIA is, I think, is a company we all know. It's a goes from data centers to gaming to even technology for autonomous driving. But I only bought one share. Why? Is again, I feel the market needs to drop a lot more, man. Because I mean, they dropped 10% ish, I think. Then I bought. My average buying price is 486, and now I'm up already 8% in the last week. So I really hope the markets will drop in October with the election, etc. Because yeah, I have cash on the side and I'm very confident to put it into the market. So we will see again what the future brings. So again, Nvidia, goodbye for the future. And then Walt Disney. I don't know what to say, gentlemen. It's just Walt Disney. I'm addicted to the Marvel movies, and every time I watch a movie or everything I watch something from Disney, I need to be a shareholder of the company, man, because my grandchildren will watch a movie of Disney. I can't explain it otherwise. I'm down 2% because yeah, already have it like for almost a year now, I think. I do have to admit my average buying price is much less, it's quite lower than the price of the current company. But yesterday there was some news. They laid off 28,000 jobs, so that's quite a lot. Maybe another sign that we maybe go into a recession or anything, we will see. But again, once Rona is gone, I think the economy is gonna get healthy again, of course. I don't know, excuse me, felt over my words. So let's just go to the next position. Diversified Gas, it's a gas company. It's actually an UK company, but it's based in America. Again, this is a 10% dividend player. They recently were added to the to some ETF from the UK, I think small caps. I don't remember it correctly, so I don't want to give the information. Don't want to give you wrong stuff, of course. Again, I probably will sell this position. I think in the next month or two, if the markets drop a lot, I will sell it. Why? Because I see much more opportunity in growth stocks, like some above this list. Okay, let's start the music again and jump to the next company. The next company is also one I have on my watch list for a long time. I never bought it because it was too high. So first, you can see it in my last portfolio update. I bought it around at 500, I think, or no, 495, something like that. Then it dropped a bit. Then I bought a new share. Now my average buying price is 449. So I only have 2 shares. Again, this company has huge potential for the future and advertisement. I'm up now 12% on this position, but I don't want to be up on this position, man. I need to be down, even double digits, so I can load up on this company. You feel me? I already have the conviction of this company, so now it's just a matter of fact. If they drop, I will buy. You can say why you don't buy now is for the long term. In my opinion, it does matter when you enter a company, man. It really does matter. Then, also one of my favorite companies, Alibaba. It's an easy one. In my opinion, it's an easy money stock for the upcoming 5 years. I almost have 1,000 euros in this company. I think that's 6% of my portfolio. Just quick maths. But again, if they drop, let's say again to $220 or something, I will buy. No capping, I will buy. Because this company is very good. They're executing very well and the growth is insane. I mean, it's easier for a small company to grow at a rate of 50%. I'm just saying something. But it's much harder for a company that's already on the market, that already has a big pie of the market share, to grow consistently. And that's what Alibaba is doing. The next company, now we are getting a little bit to the bigger positions of the company. Also one of my favorite companies, one of the first companies I bought, PayPal Holdings. I have 6 shares of PayPal. My average buying price is 71 euros. I bought it on the European stock because again, in the beginning, I did not know a lot about stocks and etc. So I just bought it on the European markets. I'm up 129% on this company. Yeah, I mean, nice numbers, but again, nothing. It's gonna be so cheap in 5 years because it's an industry. The fintech industry is growing very fast. They are adopting new tech at a surpassing rate. Let's put it like that. Okay, then again, Facebook, I think again a company everybody knows, a company everybody should invest for the upcoming 5 years, in my opinion. Not financial advice, my opinion. I have 6 shares of Facebook at the moment. My average buying price was $170. So I'm up almost 50% on this company. Quite okay. Again, I see them in the upcoming 5 years. Market cap on $1 trillion, possible, we don't know, but I mean, I think it's possible that Facebook will grow at a rate of at least 15% a year. Again, let's take a look to the another beast, Microsoft. Microsoft, also a company, everybody knows it. Is it now from your work? Is it now from from everything? Imagine you don't know Microsoft, I mean Windows, you know. I have 8 shares, average buying price 168, currently sitting at 207. That's a 15% paper gain. Again, not a lot, but we will see what the future brings, of course. Again, Microsoft can easily be a $300 stock in the upcoming 5 years. But that's again my opinion. It is just also if you are very big, you have money, to grow. You have money to spend to grow in other segments. That's a very key thing you need to know as well. Look towards Facebook. They are earning on a consistently based money, so they can improve on other segments, VR, etc. Keep in mind VR. Okay. Apple, and also sorry, e-commerce business. It's huge on Facebook. I maybe make a detailed video about it because ARK Invest recently unleashed a nice video on that. So then again, the other big stake in my company is Apple. I have currently 16 shares of Apple. You can see I'm down with my position now. This is due to the stock split. My brokerage sells the position and then buys the split again. So here you can see I made 977 euros. The total is now 1,500. So I have over a 130% gain, something like that. I don't know. I did not do the math, but it's something like that. Again, Apple I'm not gonna sell for the first 5 years. I mean, they're not gonna fail in what they're doing, of course, but I don't expect the big growth or the innovation anymore of Apple, but I do see their buyback program, their dividends. I mean, it's a good company to hold, man. It's a good company to hold. Then, a brand new position, gentlemen. SolarEdge Technologies. I have 9 shares. They are currently sitting at $231. My average buying is quite high, 192, but it's gonna be higher in the future, man, because I have so much conviction in this company. In the last, let's say, 3 weeks, almost for every day, I've been listening to press conferences, earnings calls, renewable thingies. I put so much time already in the company to build that conviction, you know, because it's a company when I bought it under 10 billion. I see them becoming a 100 billion market cap company in the upcoming 10 to 15 years. So that is quite a huge potential, but also a very huge risk because the whole solar market actually is entering bubble territory, in my opinion, because it has grown so much. But then again, it's also huge undervalued, and it's not like it's trading with a PE of 1000 or anything. It just has a PE of 69. So it's all okay, actually. I mean, growing business. So in the short term, I already made some nice paper gains, but again, doesn't matter. Okay, let's put the music on and go to the biggest position of the portfolio. And I'm gonna put it like this so you can see the total of the portfolio as well. Currently I have 15 shares of Tesla. Again, my buying price is my average buying price is misleading due to the fact that my brokerage bought and sold the stock split thingy. Here you can see I'm up 4,659 euros from my 5,366 position. If you really want to know my average buying price, it was 262 before the split, so divide that by 5. My average buying price for Tesla is $52.40. Okay, again, thank you for watching to the video. If you hope, just like the video, man. Like the video, it helps me grow, man. If you like the video, probably 3 random people will see the video in their feed. Imagine. So again, thank you for watching. Have a marvelous day, man. Bye bye.